Hello everyone, my name is Abhijit Tiwari. I hope you all are doing absolutely fine. In this video, we are going to learn about two different concepts, which is very important. First is how we are going to record goodwill in our books of account. And the second, what is the treatment of research and development cost in our books of account by following US GAAP. First scenario what I'll give you is, let's suppose you have just acquired one company for $1 million. The net asset, what you have received after acquiring the company is $600,000. $600,000. The difference, $1 million and the $600,000, the difference, what you have paid extra, how you are going to record this, because this is known as goodwill. How you are going to record this, if there is any reduction in the value of the goodwill, how you are going to do the treatment. In this video, we are going to learn each and everything. And the second aspect to it, the second scenario is, let's suppose you have done some research and development cost, you have incurred some research and development cost for developing, let's suppose, software. How you are going to, what is the treatment, how you are going to record this in books of account. This is what exactly what we are going to learn in this video. Now we are going to discuss the accounting treatment of goodwill and research and development expenditure under US GAAP. First, we'll cover goodwill. What is goodwill? So goodwill arises when a company acquires another company for more than the fair value of net identifiable asset. Let's suppose I have acquired one company and I have paid for this acquisition $1 million. Okay, I have paid $1 million. The net asset what I am going to get after the acquisition is $800,000. The difference of $200,000, I'm going to classify this as goodwill because I have paid extra. I have paid extra. So why I have paid extra? I'm going to classify this as goodwill because I'm going to get goodwill of that firm, right? How I'm going to classify in my financial statement? I'm going to classify this goodwill as my intangible asset in my balance sheet. Okay. I'll take one example. Company A acquires company B for $1.2 million. The fair value of the asset of company B's identifiable asset is $1 million. You can see the difference of $200,000. Why we have paid extra is because goodwill. Okay. Now this goodwill we are going to classify as intangible asset under balance sheet. Okay. Now let's suppose if the value of the goodwill drops to $150,000 next year, you are going to test for impairment loss. You are going to test for impairment loss. In US, we don't amortize goodwill. In US, we have to check every year for impairment loss for goodwill specifically. Okay. So initially you have recorded at this value. Now the value is this. So $50,000 difference you are going to record in your income statement as impairment loss. I hope you have learned the treatment of goodwill. Now I'm going to discuss about the entry, how we can pass the entry. Okay, let's suppose I'll take one another example. You have paid $1 million. The net asset, how we are going to calculate the net asset? The fair value of the asset of the company which we are going to acquire is the fair value of the asset is $800,000. The fair value of the liability is $200,000. So now we are going to calculate the net value of it, net asset what we are going to acquire, which is asset minus liability. So $800,000 minus $200,000. So this is our net asset. This is our net asset. We have paid $1 million and we are getting $600,000. Can you see the difference of $400,000? We have paid extra. Why we have paid extra? Because this firm has goodwill. Okay, so $400,000 we are going to recognize as goodwill. Okay, so this $400,000 we are going to recognize as goodwill. Now, what entry we are going to pass? Debit asset, because the fair value of the asset is $800,000. Then we have to credit the liability at fair value, which is $200,000. If you'll see, the net effect is $600,000 only. Now we have paid how much? 1 million for this. Okay. Now, if you'll see the difference, the balancing figure is goodwill. In debit side, we have balancing figure. Okay. So this is liability part and this is cash what you have paid to acquire. This is asset what you are going to take. So asset account debit, goodwill account debit. Then you have to credit your liability what you have received from that firm. Then the amount what you have paid for acquiring this, you are going to credit this. So asset you are going to take into your books, liability you are going to take in your books. So you are going to consider both this, and the cash what you have paid to acquire, you have to consider this. If you'll pass all the three entry, you will get automatically the difference of goodwill. Okay. Goodwill is our asset. That's why we are showing it in debit side. I hope now you have learned the accounting treatment of goodwill. Now we are going to discuss about research and development expenditure. Research and development expenditure are the cost incurred for developing a new product, services, or process. Let's suppose a company wants to develop new software. So for that, they are incurring some expenses, which is known as research and development expense. What is the treatment of it? Usually in US GAAP, we expense it out in the current period only. If we are incurring the cost, we have to expense it out in the current period only. I can take one example. A company C spend $500,000 on developing a new software product, including the cost of salary and other cost. How we are going to record this in our books of account is we are going to expense it out immediately in our income expenditure. Income expenditure, right? Now, amount would be this. Now I'm going to show you the entry, how we are going to pass this entry. So research and development expense debit, and credit cash. If we have not paid, we are going to use accounts payable. Okay, so this is the entry. In short, if I wanted to summarize this whole thing, goodwill we are going to record as our intangible asset. And in US, we don't amortize the goodwill. We have to check for impairment loss. If there is any reduction in the value, we are going to book impairment loss in our income statement. And for research and development, we have to expense it out in the current period only. I hope you have learned some new concept with the help of this video, and this is very useful. Thank you so much for connecting. Happy learning.